What's up everybody? It's Omar. It is Saturday, October 21st, 2017, 9:35 a.m. in the morning, and I wanted to make a quick video talking about my two plays yesterday. I actually did bought IMMU and I shorted CYH, and I want to talk about why and how and all that kind of stuff. So just to remind you all, if you haven't done so, go to my YouTube channel and just type watchotrade and subscribe, because I'm not saying this to be a bragger. I mean, I studied like everybody, like Sykes and Foose and Bulls on Wall Street and Investors Underground and Tim Grittani and everyone, and I can honestly say, and I'm not saying this to be brag, I'm not really humble guy. I'm actually very introverted. I don't really like social media and all that kind of stuff, to be quite honest with you, but I think my videos are as good as anybody's on the internet. And I think the way I explain things, because I'm really a teacher. Like, I've been teaching for almost 20 years in the private sector. I think I explain things in a way that I think makes sense to most people. And if what I'm providing you is exactly what you would learn in a Tim Sykes DVD, in a Cameron Foose DVD, in a Tim Grittani DVD. I actually watched Trading Tickers and a couple of these other ones. So you're not learning anything. You're not gonna learn anything. So anything different from those videos, and you're gonna learn right now in this video. And these two patterns could be like the two patterns that you could just trade, and you can do very well in a bull and bear market in. I made a video on my dip buys on FCX and RGSC 2 days ago, right? A day ago, and I talked about now I wasn't supposed to trade today. Yesterday, but I actually made a trade from my cell phone. Believe it or not, I found this on my phone. So this was my watch list for yesterday, and IMMU was on my watch list. It made my watch list because now what I do is, just to give you some insight, this is the 1 minute time frame and this is the 5 minute time frame. I usually have these two time frames when I'm looking at my chart, and these are my scanners here. Okay, I also detach a chart and I have a bigger time frame. Now what I'm going to do is I'm going to X this out, because I'm going to show you how I do this. So what you could do is you just click on this little icon here on the side, you click on detach, and then once you detach, you're gonna get, it detaches the chart. I mean, Thinkorswim is pretty powerful. It has pretty incredible charting. It sucks for executions, but it's amazing for charting. And then what I do is I just make this one chart, like instead of having the two, I just click on one, so now it's one chart. And what I'm gonna do is I'm gonna make this a 5-day 1 minute time frame. Okay, now I'm gonna remove all the indicators here. I'm just gonna remove everything except for the previous days and VWAP. So I'll remove the 48. I usually use the 13 and 48 EMAs. You don't really need them. I'll be honest. Support and resistance is the best thing. They're helpful, but you could technically trade without them. I mean, Sykes is right about that. Grittani's right about that. You don't technically need indicators, to be quite honest with you. VWAP is definitely one you should always have. All right, so I'm gonna hit apply, so it removes all that, just so you can see what I'm talking about. And when I spoke about this yesterday, when I made the video, I said, hey guys, all you could do is look for stocks that are tanking at the open and buy the dips. And what I referred to, so watch my video yesterday, I said I use this 2-candle dip buy scan, and the criteria on that scan is I look for stocks. Let me pull it up. Load personal. Let me go to 2-candle dip buy scan. So this is my criteria. I look for stocks between 20 cents and $30 that have a volume of 300,000 shares, that the price direction, the close, has decreased over the last 2 consecutive bars on the 1 minute time frame. So basically what that tells me is that it looks for stocks that are going down in price over 2 minutes. So if I had a stock that opened when the market opened with 300,000 shares traded already, and the stock goes, in the first minute goes from $5 to $4.98, and then in that second minute goes from $4.98 to $4.96, then over the 2 minute time frame it went down in price, and then those stocks would appear on those scanners, in the scanner here. And then what you could do is, these are like custom ones that I have. If you watch my video on how to create these custom indicators, I show you how to do it in the video. But let's say you didn't even use these, you could just use the strength meter that comes with Thinkorswim, and that's fine enough, where you just click this, and then what you want to see is this, the price direction like this, that's going in a down time frame. And then what that does is shows you stocks that are tanking. So what's really cool about the Thinkorswim app is that on the phone app, you can pull up your scanners to see what's tanking. So what I was just looking for, stocks that tanking, and and on my watch list, IMMU, I had a feeling that it might pull back, and sure enough, look at this beautiful pullback. All right, I actually have a PDF pamphlet that there's certain patterns that I look for. These are one of the patterns. When a stock tanks like this at the open, where you just see massive selling at the open, you're gonna eventually, it's gonna find a support level. All right, and hit the support here 1020 at that 1027 mark. So you put your little trend line here. Now obviously I didn't have a trend line, I'm just visually watching this. And once I saw the volume change, so once I saw that it touched this in this next two volume candles, it kind of started gapping up. Now what I like to usually see is like a double bottom and like a test of a pullback to see that it doesn't break below there, so that you have the confirmation that the stock is going up and it's holding that support level so that you can buy the bounce. Sometimes that doesn't happen right away. Sometimes you get that quick rip. So I felt confident because I saw the volume coming in here. It wasn't a ton of volume. Look, this is not a lot of volume, but it was enough volume for me to feel like the stock was going up. And I've traded this stock several times. So I saw it in this candle. It went to a high of 1039, and then it closed at 1037. Right in this candle where I saw it held it, I just said fuck it, I'm gonna buy it, and I just risked I'm gonna risk the low, and I went in 1,000 shares, and I just took it up. So I got executed at 1038, and look, the stock just gaps up. It got up to 1050, pulled back. I thought about selling in here, but I thought that maybe it would pull back a little bit and continue up, just because I thought this looked like a flag forming. And probably I should have just sold right in here. I mean, that's the smartest thing to do, But I got, I just tested it. I see it. I saw that it pulled back, and I saw that it was holding this 1043 level, and it couldn't break it on these two candles. So I felt like that was the new support level. So I just said I'm gonna stay in, and I just rode it up. I rode it up. It had a second pullback here, so we had another bull flag pullback. So it formed a higher low. So it broke above 1060, and I just literally rode this up, and I was getting a little bit afraid because the Wi-Fi in my job, because I was literally in a training room doing this, and it was really spotty, so I was getting scared. And I saw the bounce up, and look how it just bounces off close to VWAP, and it just continued up, and then it shot up. I sold right in this candle. I got executed at so I got in, I think it was 1038, and I got out at 1068. So, I made about $300 on this trade, which was nice. And I could have kept going, but I had to work, and I couldn't keep watching it. So, that was a great dip buy. But look at that. Had you, if you had the luxury of just continuing to watch, this thing went from, 1027 to 1106, which was incredible. A credible dip buy. IMU does that a lot, and ARRY also does the same thing quite often. And it just continued to pull back, form higher lows. All right, and you could, once you get this, so what happens is, why you're getting these pops? Because what's happening is this is the top at this point, and short seller says, oh, okay, this is gonna be the top. So they try to short the stock down, and then what's happening is more buyers are coming in, they're getting squeezed. So remember, you borrow shares from your broker at one price, and then you got to literally buy them. So they say, oh shit, it's gonna break the high again, and they get freaked out, and then they cover it, and that's what continues the spike to go up. Got up, it broke above the previous day's close price. This is the previous day's close price here, so now it looks somewhat bullish. And then you had this other little pullback here all the way to 1070, but then they get squeezed again because they cover. They see that it's not continuing to go down, and this thing went up all the way up to 1106 until you got that double top here. So right here, I mean, you see this, you see the gap down and then the gap up, but it doesn't break the high of day. This is a great entry to go short, And right here, when you see that, hey, you know what? It's not breaking 1106. This is where you take it short. Now, I didn't have the luxury to take it short. This is what you learn in like a Tim Grittani DVD. Like you basically look for the high day. You look for the stock to form a lower high. You take the short off the lower high, risking higher day. That's what he does. And he doesn't nervous. He has a shitload of money. So he's like, you know, he goes in heavy and he just waits for it to collapse. When people don't have a lot of money, they look at that P&L and they don't give the chart the time to develop. But if you notice here, what happens? The stock gaps down, boom, it comes up, it forms a lower high. So right here is another short entry because you're saying it's showing weakness. All right, it's showing weakness and it continues to go down. And then, you know, right here would have been another great dip buy because you get all this massive selling from here all the way to here. And then look, it goes all the way up as high as 1090. Or close to, yeah, touched 1089 actually. And then look, it came back down. It bounced off the previous day's close price and it went as high as 1097. So, you know, so I took that dip buy. I did a dip buy, but this is a great strategy for longing and shorting. It's that simple, guys. You know, and and that's basically how I play this. Now, the other stock, and you know, this is with no indicators. I went back to my chart, but this is a clear way to see it. See, you see the clear. What you want to do, guys, is you always want to look at, okay, what's the next support level? So if I was looking at this while this is tanking, I'm saying, okay, I got to look over the last 5 days. Here's the last 2-day chart. I say, okay, here's a support level, right? Here's a support level, right here. And then here's the low. So those are clear support levels. And you could see it just broke through both those. It didn't get to the low, but you know, you got to know what the previous support and resistance levels are. That's all stock trading is knowing where support and resistance is. And then based on that, you make your trade, you know? So that was one trade. And then the other trade I took, I have this 2-candle gap scanner. So just like it's the opposite of the dip buy scanner. All it does is, I'll load it so you can see. It shows me the 2-candle, not dip buy, 2-candle gap scanner. So all I wanted to do is it shows me 20 stocks between 20 cents and $90. So it's a higher range. Probably gonna lower that. With a volume of 300,000 shares, that's up at least 1%. Where the price direction close has increased over the last 2 consecutive bars. So it's the total opposite of the dip buy. So when I saw this like towards the afternoon, so I saw CYH pop up on my scanner. It's a stock that I traded before. So you know what you do is you just look at the charts, right? So here's CYH, right? Let's remove everything. So when I caught CYH, here's the high day at this point, 647. I actually caught CYH right when it broke 650. So this was about 1250. And what I did was I said, okay, so I thought about buying it, but I don't know. The action was slow and I just didn't feel comfortable buying anything. So I said, let me look at the chart. So what I did when I looked at the chart, I saw the chart history that previously over the last 5 days, it hit 660 and then it completely tanked. So look at this big wash it had. So it has a habit of washing. So remember, patterns repeat themselves. If you look at this stock, it has a history. If you look at this on October 17th, this thing gapped up, completely tanked. You got to look at the charts to see sort of how, how do these patterns repeat themselves. This has a habit of tanking. So what I did was I set an alert. I don't have it here now, but yesterday what I did was I didn't want to watch it because I wanted to grab some food. So what I did was I just put create alert, and then what I wanted to do was say the mark. All I do is I put the mark at it is at or above. I put 659 right before it, and then note just say look too short. You know, this is what I do, and then I hit create, and what it does, it alerts your phone and all that. So basically what happened was I walked away from my desk. I had my cell phone with me. I had the app open, and I got the alert right in this candle, which is at 107. I was literally outside of my desk, I literally came back to my desk, and that next minute, I saw that it touched 664. So now you're gonna say, all right, Omar, so how do I know to short it as opposed to buy it? Very simple. If this is the right, if 660 is the high, right? So 660. Let me zoom out. This is how you buy it. This is a pattern I got from the Tim Grittani DVD, but I didn't really need to see Tim Grittani DVD. It's just pretty common sense. If the stock is 659, right? That's the high over the last 5 days, right? You see that it's gonna break out. So a lot of people say, oh, it's gonna break out, so let's let's buy the stock. What I would do, I wouldn't buy it initially on the breakout. What would confirm a breakout pattern to me is to see the stock gap up, pull back, and hold that 659, 660 mark. Now, if I had saw it gap up, pull back, so let me see if I can do a drawing. I don't know if, let me see, go to drawing tools. See if I could just do it, if it lets me do a straight drawing. Just lets me do arrows. But here, let me pull up paint so you can see what I'm talking about. Let's go to paint. Yeah, there it is. So let me show you. Simple. So let's say this is the 5 day, right? Let's say this is that 660 level, right? All right. The stock is gapping up, right? If the stock breaks above it, I want to see it come back down and test that high. Now, if it holds this and then goes up, that's the sign for me to buy. All right, that's the sign for me to buy, because now it's holding. That's a new support level. All right. What you do, what as a short seller, what I like to do is, all right, so I saw it break the high. Okay, it broke the high, right? It came down. All right, so it starts coming down. It's not holding at 660. I'm seeing it break down, and right when I saw this pop at 658, that's showing me weakness. That's showing me that it's not going to gap up again. Now, I could have took the short here, but I just wanted to make sure. I said, let me see when it's going to pop. If I'll short the pop, and right here at the 657 mark, I shorted that pop. So I took a short here, right here in this candle at 657. You know, just 1,000 shares. It wasn't a tremendous amount of volume, and I just rolled this down. It wasn't big. I just rolled it down to VWAP. So right in this candle. So at 657, I took a short. I covered here at 645. I made a quick 120. All right, that was my trade. You know, so you're gonna say, well, Omar, how do these and you're gonna see that. Look what happened right in here. It short sell is covered right in here. See, that's why you got the quick spike, because they saw it wasn't continuing to break down. So they're like, all right, people who shorted like me here in this pop, you know, they're looking to cover. And what happens is, the reason why short sellers make so money is that when a stock has volume and it has this sort of pattern, they take a lot of size. That's how they make their money. You know, they take 5,000 shares, 10,000 shares. So if I take 10,000 shares and the stock moves 10 cents, I just made $1,000. You know, you don't need it to move much. That's why Steven Ducks and Tim Grittani, those guys make a lot of money. They're not getting monster washes, not all the time. A lot of times, if you go to their Profitly and see their trades, they're like 10 cents, 15 cents. But they got so much size that they make a lot of money. You know, but that's a big risk, because if it goes against you, you could lose a shitload of money too. Trust me, they lose a lot. They're not posting it, but they're losing. All right, so that's it, man. That's it. You know, it's that simple. Okay, so again, remember, right? This is higher day limits. So this was the breakout level. It broke above it, right? So at this point, this is higher day. Okay, you see that it's testing the breakout level, but it breaks below it, right? You got the pop, but it forms a lower high right here. So this is your entry, and this is your exit. All right, that's your risk. You can risk this. You can risk this high, 660, or the higher day, 664. So, you know, if you're scared of losing a lot of money, don't take a lot of shares. You know, 500 shares or something like that. Who cares? You grow your account slowly over time. You know, you shouldn't be taking the money out your account. Most people are like me, they have jobs and they trade on the side. Let that grow. Don't be taking money out of there. Let it grow. You know, that's what you want to do. And you see, sometimes you're going to hit home runs. Sometimes you're going to get stocks and you're going to short, and the stock is going to go down a point or two. You don't even realize it. You know, sometimes those things happen. So that's basically what I do. All right, guys. So I hope you found this helpful. Again, you know, like, subscribe, share. I'm on Twitter, watchotrade. I post my watch list. I just look for stocks that are volatile. I don't really go into what I expect each stock to do. But if you remember, if you just look through the stocks, right? If I post a stock on my watch list, all you're gonna say, okay, let me pull up that chart. Let me see what the high and the low is. So you're gonna say, okay, so this is the high over the last 5 days. Let's say this day didn't happen, right? It hasn't happened yet. So I'm gonna say, okay, here's the clear support level. Seems to be about right here, 135. There's another support level here at 136. So 136, 140, 35 level. So what I'm gonna do, all right, according to what I see, here's the top yesterday, right? So this would have been, so I'm looking to see it pull back. If it holds that support, guess what? I buy the dip, all right? If it breaks above it and pulls back and holds that key resistance level, which now becomes support, I go long, risking the next resistance level. That's it. That's what these traders do, guys. It's not rocket science. Like the best traders aren't even using most of them. A lot of them don't even use indicators. Just VWAP. Some of them use the Fibonacci's. Fibonacci is really good. If you can learn it, I don't really know it that well, but if you can use Fibonacci retracements are pretty powerful. If you can figure out how to work that on a 1 day time frame or even on swing trade level, like on the yearly, they're very, very powerful. All right, so that's what I wanted to talk about, folks. Hope you find this helpful. Hope you have a fantastic weekend. Again, like my videos, subscribe, share, and you know, if I see if I see it, you know, keep growing, I'll keep doing it. You know, and if I see people interacting with me, I'll keep doing it. But once I see the momentum dies, I'll probably like disappear, fade to black. All right, so have a great weekend, folks. I may do another video using FinViz and this and just build a watch list for Monday. I'll think about it. I'm going to go enjoy my weekend, guys.